a rental property can be a great investment, but it also comes with several risks. Here to tell us some things you should consider before becoming a landlord is Everything Financial's president, Peter Cishecki. Good morning, Peter. Good to see you.
Good morning.
Good topic. Before we talk about that, we want to talk about inflation. Of course, it's trending downward at 3.4%, announced just yesterday. This is the lowest it's been in 2 years.
Yeah.
So when are we going to see those interest rates follow?
Well, unfortunately, probably not till close to the end of the year. They should go down because they should be about 2% difference from inflation. But here we go. The government has the audacity to think that they can raise interest rates to control housing prices. That's not going to work. So we're going to see a little bump probably, and then they will follow downwards because they have to, or else the economy can crash.
A bump in interest rates before they go down.
They think that'll stop housing, but housing's a commodity. Raising interest rates a quarter or half a point isn't going to affect the housing market because it's supply and demand.
Okay, we'll have to watch and see what happens there. So now let's talk about rental properties. A lot of people have one, hoping to generate extra passive income, if you will. But these interest rates have been so high, so it's been a little bit more of a challenge. Is getting into that market to have a rental property, is that a good idea?
Not if it's going to create, you said the great thing, passive income. Not if it's going to create passive debt. So if you're supplementing the property going backwards and you still have a mortgage on your own house where the interest is not in a position to be tax deductible, let's say, creating debt on the other side and supplementing the property isn't a good thing. I mean, small supplement maybe, but what we've seen with these interest rate increases, people having huge supplements to carry the rental property that exceeds the growth of the rental property. When that happens, that's a red flag. That's not a good idea.
And they're not getting enough from the actual rent of the property to help cover the debt and the rising interest.
Pretty tough to do in BC when you have the most expensive real estate in the Lower Mainland, or top 4 in the world, to have rental property for, say, a single homeowner trying to buy one other piece of property.
Yeah, it's really difficult. Should you consider taking on another property, or what if you have other debt in the first place?
No, look at your personal debt first, get that in line. Look at your, and we talk about this all the time, but retirement plan. Make sure your base of your plan, whether it's your house, retirement, other debts, cars, personal life, travel, are all in order first before you take on a luxury of a rental property that could cause a lot of stress, because bad finances and bad financial decisions that put you underwater cause a lot of stress in the home you don't need. And we've gone through 4 years of stress, one thing after another. Maybe give yourself a break and think about it.
It's been a tough couple of years for sure. For those who already are in that market, they own a property, they're renting it out, and they're having to subsidize it. Is there a point where it's like, well, you know, maybe I should just let this property go? Or how much should one consider subsidizing? When is too much?
Well, too much when you're going in the hole on a regular basis, and other debts, credit card debts at 20-something% are creeping up. Maybe your mortgage is renewing, and instead of that 2.5% rate, you're about to get a 6% rate. That's when you can look, but also look at getting rid of or disposing of the rental property when you can still make adjustments for potential capital gains. Because when you can sell a rental property and make the adjustments to pay zero tax on the capital gains, so it's free money, that's a great thing to do. When you can get free money from the government, do it. And we've talked about this before, lots of ways to avoid capital gains, but do it while you still can. And one of those things is before age 71, because you can use your RSPs, if you have contribution room, to offset the capital gains in a rental property. So take that free money, don't let it pass you by.
Maybe if you're at a certain age, maybe that's something to consider.
Absolutely.
Okay, what about, because you can write off a lot of your rental property, right? I mean, how does the rising interest rates, or how does the big picture factor into that?
It does give you a bigger write-off on what it's costing you, but to the point that where's the write-off so big that you can't afford to pay it anymore?
Right.
So write-offs are great if you can use them and if you can afford to have them. But when interest rates go up, the pro is much bigger write-off. The con is possibly much more debt.
Much more debt. All right. Peter Cishecki with Everything Financial. Everything Financial. I got it.
You got it.
I've been saying it so often. These are kind of on autopilot. I got it this morning. Peter, thanks for joining us today.
Thanks, Gary.